Welcome to Season 2 of the SOAR podcast, the place for creative entrepreneurs who want to build healthier, happier, more profitable self-employed businesses. I'm your host, Ray Hyde-Cornell, business mentor at Chiron Consulting and CEO and senior copywriter at Cornell Content Marketing. Get ready to soar. Welcome to the SOAR podcast. I'm your host, Ray Hyde-Cornell, and today we have a very special guest, Dr. Noor Ali. Noor, please tell our listeners about what you do.
Hi, Ray. Thank you so much for having me on this show. I'm a huge fan of yours, so this is truly an honor. Thank you again. So hi, everyone. My name is Dr. Noor. I live in Tampa, Florida, but I work with freelancers, creative entrepreneurs, small business owners all over the nation, and I help them figure out the most unsexiest part of their business, their health insurance. And I do it under 15 minutes, and it's what I do all day long. I talk health insurance.
I have been so excited to interview you for this podcast because this is one of the biggest roadblocks that I see for people who want to pull the trigger and go freelance. You know me, I am a huge supporter of be self-employed, be your own independent income generator. Like, you don't need an employer, screw the W-2. But then everybody turns to me and goes, what about health insurance? What do I do? And you and I had a call because my husband, who currently, as of this recording, which is June 2022, he's currently working for FedEx, and we are counting the days when he can leave. And one of the big things holding us back, is the health insurance question. And I literally had a 20-minute conversation with you, and you answered all of our questions, and it was mind-blowing. So I want to dig into this for our listeners in a nutshell, and feel free to kind of categorize this, organize this for me, because I feel like all of our listeners are coming at this from this big question of, what do I do about health insurance when I'm self-employed? What are my options?
Mm-hmm. Yeah, thank you, Ray, for that question. And thank you for being open about sharing your situation, because I do experience that all the time. It's the biggest, most daunting factor when making that leap, right? And I find that it holds back so many creatives from pursuing their dreams because they're just holding on to this one little benefit. And that makes me so sad. It makes my heart hurt. And the reason, and a lot of it, is because if you start kind of researching the options on yourself and you go down the Google rabbit hole, it can become so difficult. And if you've been one of those people who've been barraged with telemarketing calls, I'm so sorry for that. But it's just kind of how the industry is. So today, what I'd like to do is kind of just lay out the options in at least a few fragments and pieces so it can make sense. So you, as a listener, if you're listening on, you can place yourself kind of in this map and see where you are and what your options are. Okay.
Perfect.
Yeah. So Ray, we can use you as an example, or let's say you're in a situation where you kind of want to leave that, you want to cut ties with your employer, but you work for a huge corporation and they're giving great benefits. The first thing I want you to understand is we can't replace that. When you work for a huge corporation or employer, you're part of this huge group, right? And they're reducing that risk pool, they're subsidizing your cost. And then on top of that, your employer is paying a huge contribution to that premium, typically 50 to 80%. So what comes out of your paycheck from an employer when you're part of an employer-sponsored health insurance benefits package is very little. So you're never seeing the full sticker price, first of all, and we can never emulate that full sticker price. So that's the first thing I want you guys to kind of keep in mind. We can never get to that. But what we can do is understand what our options really are, leverage our situation, and then take advantage of that. So let's say you no longer have that option of that employer-sponsored health plan, and you have to figure out health insurance for yourself. There's really two markets to go shopping for health insurance, and these worlds are completely separate and they hardly ever touch. So you've got your public healthcare marketplace and you've got your private healthcare marketplace, right? The public healthcare marketplace, also known as healthcare.gov, ACA, advent in 2008, started being called Obamacare, another politicized term. All of that is the same thing. So that's the federal government sponsoring your state marketplace. And where you live has everything to do with what options are available to you and what your premiums are. So your location is a huge part of the algorithm that goes into determining your premiums. So that's one thing. So that's the public marketplace. The private marketplace is a whole different animal, because then you've got all of these different insurance companies offering all of these different kind of plans. And unlike the public marketplace, there's no neat little portal like healthcare.gov that lists all of your options available to you with filters where you can kind of, comparison shop like a credit card. We don't have those tools and features. So it can get really daunting on which one to go for and what to go for. So that was a lot so far. Ray, you still with me?
Yeah, I am. You're totally right, though. There's purchasing through the federal sponsored platform, right? And then there's purchasing directly through a health insurance company. Do I have that right?
The private marketplace can be through a company. It can be through, another smaller group. So there's different models there. So there's just tons of models, but generally, yes, you've got, that marketplace and that marketplace. Yeah. So I'll talk a little bit about the pros and cons, Ray, to see what is going to be, which route to go for, because these are our primary differentiators, right? So for the federally sponsored healthcare marketplace, a few notes here. You can only pick up a plan during open enrollment. And that's typically November and December, and plans start in January. So that's when you can kind of shop around, pick a plan, sign up to begin January of the next year. Unless you have a special life qualifying event, such as you lost a job, you moved, you had a baby, right? So those are some instances where you can pick up a government public marketplace plan outside of open enrollment.
Within a certain window. I have to throw this in because this is what happened to me with when my husband and I got married. So we've been together 11 years, but we got married just 4 years ago. And when we got married, I didn't know that I had a window in which I could be added to his health insurance and we could make changes within the marketplace. And it wasn't until like I had done all the name change stuff and all of that thing, the things that take forever. It was like 3 or 4 months. And then I go, oh, okay, now let's add me to your health insurance. It was too late. So if you know that you're going to have a significant life event come up, like you're going to have a baby, you're going to get married, figure out what that window is ahead of time so you don't end up in the situation I ended up in.
Yes, thank you so much for pointing that window out. The windows are harsh and they're non-negotiable. So you have to kind of meet that deadline. And since you mentioned special life event, babies, I want to mention a window for babies. If you have a newborn, if you just had a baby, they are only covered under the parent for the first 31 days of life. So they have to be added as a dependent within that first month. So if they cross that 31 days, you've kind of lost that window. So please make sure to add your newborn to your plan as soon as they're born.
It's just insane. This whole health insurance industry is not really conducive to life. And I just want to kind of put that out there to know, for listeners to know that that's why you're here, because people are not thinking about, oh my God, I just had a baby. Let me go add the baby to my health insurance. They're thinking, oh my God, I just had a baby. Now I have to be a parent. How do I figure this thing out? Does it sleep? Does it not sleep? When does it want to eat? Like you're just trying to figure out how to be a parent. And so
like, how are you supposed to know that? Like that information, adding in 31 days of life, like where does it say that? And what parental guideline does it say that? And I'm a first-time mom too. So if I hadn't completely prepared on the insurance side before I had my child, I would never have known that.
Yeah. Which is why I just want people to know you don't have to know it all. You don't have to know all of these things. And that's why I'm going to probably say this like 10 more times on this episode. That's why I'm so grateful that you're here, because you are untangling this giant puzzle piece that is the health insurance industry.
No, thank you so much, Ryan. Thank you for having a platform to offer offer these resources for your community, because we all need it. Like if I didn't, in my personal experience, if I wasn't an expert in health insurance now, I struggled myself. I didn't know what a deductible was. And I would get very mad in January when I would receive a bill and say, what is this? Why does my health insurance not cover it? So I've been there personally and I get it. And unless you are a professional in the industry, it's unrealistic to expect you to know the ins and outs, So thank you again for allowing me to explain.
Absolutely. No, I got us a little off track there. So
that's okay.
Take us back. Where did I get us derailed?
That's okay. We were talking a little bit about the federally sponsored
Yes.
healthcare marketplace, the public marketplace, some pros and cons and some things to note. So we talked about open enrollment when you can pick a plan.
Perfect. Yeah.
Outside of open enrollment, we've got life qualifying events, but of course there's a 30-day, 60-day window there that you have to meet. Now, when should you opt or when should you shop on the state marketplace? Typically, the time I recommend is if you are earning 50K or under. The reason I say that is because that's kind of for a household size of one, if you file taxes as a single unmarried person, if you're earning under that amount, you're qualifying for a subsidy from the government, which can be huge when you're just starting out in your career, in your freelancing career, when you're just building up resources, right? So that means the government is paying for a portion of your premium and subsidize that cost. However, the marketplace plans do come with pretty high deductibles. And the reason for that is they're taking on anyone and everyone. They're guaranteed issue plans. So even if you're healthy and you're not using health insurance too much, or if you're chronically ill and you're using health insurance a lot, since they're taking on all of these different risk pools, in order to offset their profitability, the deductibles are higher. So it really depends on who you are, your level of usage of health insurance. A high deductible plan might not be a good idea for you, but if you're just starting out and your income is lower, that subsidy might be more beneficial than a high deductible for you. So consider that.
So go a step further on that one for me. So if you can get a lower price on your premium, but that comes with a higher deductible, in the instance that you need to actually use your health insurance, then I would think that that sort of situation is going to be better for someone who's not chronically ill, who is generally healthy, who doesn't have a risky lifestyle, and who has a lower likelihood of needing to use their health insurance. Do I have that logically right?
Well, I personally do not advocate for high deductible plans for healthy individuals because the system or health insurance companies want you to believe, well, you hardly use your insurance anyways. Just get this lower premium, higher deductible plan. But here's the situation, Ray. If you're going in just once a year for annual physicals, maybe here and there for a cough and cold, the average healthy American typically goes in 2 to 3 times a year and spends barely $1,000 in medical expenses, right? You and I are probably in that same boat. Now, think about this situation. You hardly ever use your insurance, but the one time you actually need to, you have a car accident or an appendectomy, or you just had to go to the ER for a stomach ache, and now you're looking at tens of thousands of dollars of bills, and you have a high deductible plan, that means you are coming out of pocket an additional $8,000 to $10,000 before your health insurance is going to pay you any benefits, and you had just paid your monthly premiums all this time.
Mm-hmm.
So think about the situation on the two perspectives. Your health insurance company is really not paying much. It's just it's using your money to pay for your medical bills in the very small chance that you actually need to use your health insurance.
And on top of that, you're getting hit with that bill when you're sick or recovering. And as a freelancer, you probably aren't getting paid during that time if you need to take time off. There is no PTO as a freelancer. So yeah, that's an excellent point. I'm so glad you corrected me on that, because I think a lot of people would think that way, that, oh, I don't anticipate using my insurance that often. I can stomach a higher deductible. But no, actually, you're saying that's where they get you. That's the trap that people get into, and then they get slammed with this huge bill.
Yes, and that's the mental conditioning that we've been kind of born into by insurance companies. Like, oh yeah, you just get a high deductible bill. But think about the insurance companies. They've been pocketing your premiums your whole time, and you're paying upfront for your huge deductible. When and how are they paying? They've already collected all the money from you in order to pay those bills anyway. So I personally don't advocate that at all. And it's difficult for me to kind of change that status quo with just a simple conversation. But the solution that I propose is not the opposite extreme either, but somewhat of a balance, where you're balancing your premium that's affordable to you to a deductible that's reasonable to you, that of course we don't want to be out of pocket a lot. But yeah, that's what I propose, is finding that sweet spot balance where you don't feel screwed in the event that something does happen to you.
Yeah. Okay. So there are all these factors to juggle. Are there any other pros and cons that we need to be aware of?
Yeah, so back to marketplace, consider, if the price is really a factor for you and you're just starting out your freelance career and you're qualifying for a subsidy, consider the marketplace plan. But also keep in mind that they're HMO networks most of the time. And if you're a freelancer who likes to travel, who likes the digital nomad lifestyle, and you want to work in different places and cities, you really want a PPO plan, which you will not find on the federal marketplace. So those are some things to consider.
I'm so glad you touched on that, because I actually have that in my notes of one of the things I wanted to ask you is, what do you recommend for those digital nomads, the people who are either traveling out of country or who just like to hop around every few months to a different place? You mentioned PPO. What does that allow digital nomads to do compared to an HMO?
Yes, that's a great question. So in summary, let's wrap up the marketplace real quick. So the public marketplace is really the only time I recommend it is if you're just starting out, lower income, can qualify for a subsidy, or your higher usage of health insurance, and you're going to meet your deductible, in which case you need that major medical plan and it's going to be worth it. Or if you're pretty stable and you don't move around a lot, HMO plans means that the plan works in the county that you live in. It serves that locality. And you're assigned a primary care provider who kind of acts as the gatekeeper to usage of your health insurance. So they will assess you and they will manage your health. And if you need to see a specialist, you kind of need to go through your gatekeeper to get a referral, which can be a little annoying. So those are some of the pros and cons. So let's come back to the digital nomad lifestyle. So that's an HMO. A PPO is a preferred provider organization, and it refers to the type of network of providers you have access to. So HMO, you're limited in that access of network of providers. PPO, it's a lot wider net, and it works across state lines. So of course, you still always want to stay in network with whatever you network you're part of, but a PPO network allows you to see whatever doctor you want, whatever hospital you want, anywhere in the country. So those are some of the benefits.
And would you recommend that for someone who, I have a lot of independent contractors on my team, writers in particular, who are outside of the US. They're American citizens, but they like to travel. One that's in the Czech Republic, one that's in Thailand, and they kind of hop all over to different countries. Now, does that have any bearing on choosing a health insurance plan, or are they kind of SOL because they're not in the US?
Yeah, that's a great question. When you leave US, that kind of falls into travel insurance and traveler's insurance category. Okay. So it's a completely different animal. So I absolutely encourage traveler's insurance. I have a personal story as well where I struggled with getting pregnant for 7 years, and I finally got pregnant, and I happened to be in Australia doing research. So, and far from my family and away from everyone. And I did happen to have traveler's insurance. I was able to get my initial, checkup and everything done. But yeah, like situations like that, that's what insurance was designed for. But even though I did have a policy back home in the States, it's not going to work outside of the United States. So if you're traveling outside of homeland, make sure you have traveler's insurance.
That's interesting that you said that, because I'm so ignorant about insurance. Apparently, you're just opening my eyes to so many things. I always thought of traveler's insurance as like, if there's a storm or if you break your leg and you can't go on your trip, your traveler's insurance will reimburse you for like your plane ticket, your hotel costs that you can't recuperate, and things like that. So do I have that completely wrong? Like traveler's insurance is actually for medical situations?
No, you're totally right, right? And that's
Okay.
that's like kind of like trip insurance, I would say, which is under the umbrella of travel insurance, but there's definitely a medical side of travel insurance, which typically covers accidents. But mine was a little bit more robust, which covers sickness and disease. And, of course, pregnancy is a physiological state, but it's not an accident. It falls under sickness, illness. So that's how it was covered. So if you get hurt or sick during your travels, that's where that portion of the traveler's insurance comes into clutch.
Okay, so I was only half wrong. Okay.
Yeah.
Excellent. Okay.
It's definitely a part of it. You're not wrong. You're right.
We are going to take a super short break. And when we come back, we're going to talk about some more alternative ideas that you might want to explore for your health insurance needs. So we will be right back. Hey, Ray here. Ever wish this whole creative self-employment thing was easier? Like, wouldn't it be nice if there was, I don't know, a step-by-step guide for building a successful freelance business? You know where I'm going with this, right? That guide does exist. Back in the day when I first started out hustling and side gigging, I wish I had a roadmap to fast track my way to self-employed success. So I made one for you. No matter where you are in business, I guarantee you this guide can help you get to the next stage faster, and the next, and the next. Whether you're still deciding if ditching the W-2 is right for you, or if you're struggling with your pricing, business formation, client acquisition, sales, or even health insurance, this guide has everything you need. Get your free copy of the complete guide to building a successful freelance business at chironconsulting.us/guide. And we're back with Dr. Noor Ali. Okay, so when you and I had this conversation earlier this year about what is the right health insurance solution for me and my husband, we went through all of these factors, and I'm just amazed at how fast your brain works and how you're able to take all of these different factors and then tell me, okay, this is the right option for you. And I'll be totally honest with our audience here, and I'll share the numbers that you shared with me, if that's okay with you, with the caveat, the asterisk, that the economy has changed since then. This was, I want to say, like January or February 2022. We're now recording in June 2022. Things have likely changed since then. But my husband pays about $380 a month for our health insurance through his current employer, FedEx. When we ran the numbers, we landed at about, I think it was 700 or so for the both of us to be covered. And then it would go up from there if we also wanted to add vision and dental. And that was mind-blowing to me. I thought it was going to be so much more expensive than that. And granted, it may be now, but it really opened my eyes to, wow, this is going to be so much easier than I thought. And just the sheer intimidation factor of the insurance industry really holds people back more than the actual financial piece of it. And the other thing that we talked about was, one of the things I asked you was, okay, I don't like insurance companies. What if I didn't pay them? And instead, I took that $700 or $800 a month and I put it into a savings account. So instead of giving that to the insurance company, I'm giving it to future me in case of an emergency. And knowing that hospitals often bill insurance companies more than they bill patients who are cash payers, my thinking is, if we have an accident, if there's some situation where we have to go to the hospital, they're going to charge us less, and then we can pay them cash from our savings account. But you told me that you would advise against that. That's probably not a good idea. Tell me why. Remind me, what did you say was the reason not to do that?
Yeah, because, well, you don't have a stop loss, which is the point of medical insurance. And Ray, we don't know at what point in your life you may have that catastrophic accident that gives you a six-figure bill. Maybe you had only saved up 2 months worth of, savings, and you don't have enough. Then what? Then those bills are coming out of your personal savings. So just because of that unknown factor of when an accident may happen, how much your medical bills may be, that's the reason I would recommend having more of that traditional insurance model where you know that this is the most I'm going to pay and there's going to be no medical hemorrhage after that, which is why I'd advise that at that time.
Yeah. And that's an excellent point, and one that I hadn't thought of, because you're right. I would need to save up like a year or more's worth to cover pretty much any hospital bill. I mean, even just when my husband and I went and got tested for COVID at the beginning of the year, because we were both sick, I looked at the, pre-insurance total, and I was just like flabbergasted. And that was just for waiting in the lobby of the urgent care for 6 hours, and then being in there waiting, or in their like patient room for 15 minutes while they did a test. That was it. And those astronomical costs really add up. And if you have something like a car accident or something that you can't predict, oftentimes those costs are going to be higher than what you've saved up for. So is there some sort of pattern that you've noticed in working with so many freelancers and entrepreneurs like you do, that these types of scenarios are often best for these types of freelancers and entrepreneurs?
Yes, totally. And I'll address that. I do want to honor you, Ray, for something you pointed out, because you're absolutely right. When you think about why wouldn't I just save this money? Because it is a fact that providers, hospitals, doctors, whatever medical offices do bill higher to insurance companies for the same service, billing through insurance, rather than if you were to be a cash pay self-insured patient. So that is absolutely a fact. But again, I would still encourage having a health insurance plan that aligns with our healthcare system, because we individually, Ray, you and I cannot beat the system, or we can't figure it out between you and I. So what I like to do, or what I aim to do, is when I advise, is use my knowledge and my experience to help guide you in your decision making, to put you in the best possible situation. Leverage your situation. We can't single-handedly change the system, but if we understand the system and don't fear the system, then we can make some informed decisions that make us feel empowered. Right? There's a terminology that gets thrown around in my industry a lot, that insurance is peace of mind, having insurance is peace of mind. I don't think the insurance itself is peace of mind. I don't want to pay hundreds of dollars a month for insurance, but I have all of them. I've got home, auto, life, whatever it is, I've got it. And that's not the peace of mind I get. The peace of mind comes from when I understand my policy, when I know that if I have a baby, this is how much it's going to cost. If my house goes on fire, I can get a new house because this is how much my policy covers. So I just want to come back to that, is, the point of insurance is not having insurance and having peace of mind. It's really understanding your coverage and feeling empowered, knowing that you're good in the situations that you're concerned about.
Yeah.
I just wanted to inject
Very well said.
Yeah. Okay. So let's come and talk about the great job. Thank you for sharing those real life examples for the quotes for you and your husband. I think that's really important. So I want to talk a little bit more about these real life situations and numbers itself. So an employer sponsored package, imagine that FedEx is paying about half of his premium, to be conservative. If you guys were to shop on the federal marketplace, because you're earning a lot, you're earning more than the subsidy qualifying levels, your premiums are probably going to look 30 to 40% more than what I had quoted with a higher deductible and an HMO network. But we looked at some options on the private market. So let's talk about that. Let's talk about what are those options on the private market and how are we able to give you that quote. So I'll first talk about, Ray, an option that I love and I specialize in, and I do this all the time, and I advocate for this a lot. So this is a type of a plan. It's called a medically underwritten health insurance policy, where instead of using your income as the primary determining factor to calculate your premiums, we're going to use your good health. So if you're an average healthy American who just goes in once or twice a year, has maybe some routine low-cost medications, but really need quality health insurance for that time where something unexpected happens, but you have that lifestyle where you may hop from agency to agency, or you're traveling around the states, basically the freelance lifestyle, this type of a plan is perfect for you. Here, we're using your good health to reduce your risk categorizations, and there are certain private health insurance companies who are willing to bet on that risk, that Ray and her husband are just not going to use insurance that much. So let's give them a lot of benefits at a lot lower cost. And that's how we can get you that price point for that quality of coverage. So that's the plan that we discussed. I love this a lot. I would suggest that if you are in the growth stage of your business is stable, you know that you're going to get more clients, or you know that your next step is just growing and scaling, this is a great time to consider this plan, because now we're not going to even take your income into the equation. We're just going to use your good health. So no matter how much money you make, your premiums are staying stable. You see what we did there? Instead of using income, now we're going to take income out of the equation, because I don't want to tie my income to my health insurance premium. Now it's going to go up and up, right?
Right.
So now
Exactly.
we're going to use good health and take the income out of the equation, and that's how we can leverage that situation.
Now, what happens in that sort of situation with that type of plan if I ended up developing a condition? Let's say I end up getting diagnosed with MS or something like cataclysmic. Then what happens? Is the company going to rip the policy out from underneath me?
No, that's a great question. Absolutely not. And that's the beauty of it, is once we can get you underwritten and into the policy, you're guaranteed to be covered no matter what happens. So it is really important to kind of slip into these plans, of course, when you're in a healthier state, because then the company agrees to cover you for whatever happens after the fact.
And that's for as long as you have the policy?
Uh-huh.
Wow. Okay. Okay. Excellent. So there's one other thing I wanted to ask you about that I've kind of heard rumors about. I don't really fully understand. And I think they're referred to as like health share plans. And, here I live in Lubbock, Texas, and the Mennonite community is really big here. And they have these great community resources. And one of them is a health share plan for their members. And my personal trainer is in their plan, and he was telling me a little bit about it, and that is the extent of my knowledge. So tell me about health share plans and if that's an option for freelancers.
Sure. Yes, it's a wonderful option, and it may be an option for you. I'll tell a little bit about my experience with it as well. It's not something that I work with closely, but here's how I like to describe it. It is very popular in faith-based communities because that's the model. The model is really based on faith. So you have a strong community who comes together and they contribute their money into a pool every month. And you can think of that as the premium, right? So now we have the more people contributing into the pool just gets bigger and bigger. And if someone in that community has a major medical expense, like a surgery or an accident or a big medical bill, they look into their pot of money and then they say, hey, let's help this member out with their medical expenses with the money that we've collected, which is for that purpose. Again, it works great for many people. The experience I have had with that is because it's not true traditional insurance. So what you're doing is you're essentially self-pay, because it's not really insurance at all. It's just kind of a pot of money that's being collected. Because you're self-pay, you have to kind of pay out of pocket. So you have to have those funds available and accessible, and then you apply for reimbursement from the health share. Right. And because it's not guaranteed insurance or guaranteed payment, what I've seen in my experience is people come to me after not being reimbursed, and it's been over a year, and they're just frustrated and they're ready to give up and switch to a more traditional model. So I would say it works for many, but if you have had an experience where you try to use it or get a claim and it's been a long time, that's when some people get frustrated and want to switch to a more traditional model.
Yeah. And I've heard that, on the upside, again, I'm hearing this secondhand through my personal trainer, who he is in this health share plan with the Mennonite community, but he's not actually a Mennonite. So it was one of those things where he had to kind of like check some boxes. Like he had to say, okay, I don't smoke. He's a trainer, so he works out regularly, that sort of thing. And then they allowed him to come in, even though he's not a member of their church. So on the upside, those sorts of communities seem to be open to working with people outside of their immediate faith-based circle. But on the downside, to your point, you have to pay out of pocket and then seek reimbursement. And B, it's up to them entirely if they are going to reimburse you. And they may not reimburse you in full, even if they do say they will reimburse you, then you may get a partial reimbursement or something like that.
Correct.
Yeah. Wow. Okay. So are there any other options that we should touch on for people to know and start kind of thinking, okay, I think this one might be right for me?
I want to introduce two other ones, and really quickly, because I do think in the freelance community, again, the career situations are so volatile. If you're in a situation where you need coverage for a very short amount of time, a short-term plan would be great for that. It was really designed as gap coverage. The premiums are very, very affordable. I just want to make a point here that short-term plans should never be used in lieu of actual major medical, full-term, full coverage plans, because we will see that happen in the industry a lot, that, because this is such a great price point, just, why don't I just have this forever? But remember that it was designed as gap coverage. So it's not meant to cover the things you really wanted to. They're going to have high deductibles because the premium is so low. And you'll find that question that you had, that what if something happens to me on the plan, the underwriting is done on the back end, which means there's a big chance they can say, oh, you're too big of a risk now, we don't really want to cover that. We'll maybe pay this bill, but we're not going to pay anything after the next 3 months related to this claim or related to this diagnosis. So yeah, it's really just for a short-term solution if you're in a position that you need that. I wanted to mention that.
Wow, that's scary for someone. This whole thing, I think, is so intimidating to people because A, there are so many options. B, the terminology is just all over the place. There's like 19 different ways to talk about one same thing. And then on top of that, you're really giving your control over to another company if you choose the wrong option. So, like we talked about with the health, what did I call it? The health share plans, where they have to agree to reimburse you. And then these plans where they're underwritten after the fact, they could say, oh, no, you paid into this plan, but actually we're not going to cover that. That's really scary. And so it seems to me like there are really two options. One is, and correct me if I'm wrong here and oversimplifying, but if you are early in your career, you're not making that much per month, the health insurance marketplace, the federal option, that's going to be your best bet. And then if you are stable in your income, that's when you want to go the private sector.
Yes, yes,
Yeah.
you're not oversimplifying. I think that's a great general rule. When we come into kind of problems outside of the formula is when you're in a unique situation where you're making a lot of money and you have a medical need, a chronic condition that where it makes you ineligible for a medically underwritten plan, or something like that. I would say is the toughest situation to be in.
Yeah, yeah. And the last thing I want to say on this, kind of getting on my soapbox here a little bit, is I know in the case of these private plans, we're talking about big numbers. I mentioned the 700 to 800 range. By now, maybe that number is around $1,000. And here's my take on that. If I'm paying $1,000 a month for my husband and I to be covered for our health insurance, no matter what happens, that is only about and I'm going to be conservative here, so that's only about a $700 difference compared to what he's currently paying through his employer, through FedEx, that's being pulled out of his paycheck. And yet $700 to me is so worth it. That is so cheap to buy his freedom from a company that says you have to be at this location from 6 a.m. to 5 p.m. and whatever his crazy hours are, that's often his schedule. That $700, that buys his freedom. That buys his autonomy. That buys him not having a ceiling on his income. Right now, FedEx says what he can and cannot make. They say, this is your hourly rate, can't do anything else about it. But if he goes freelance, if he decides to cut that employment cord and do his own thing, he can not only beat what FedEx is paying him in a month, but then he has his freedom and his flexibility and his autonomy back. And so I just want people to look at this beyond the numbers, because you're not just buying health insurance. You're buying your way of life. You're buying your security in the way that you choose to have it, not in a way that an employer dictates. So I would love to hear if you have worked with people who have kind of been on the fence of, should I go freelance? Should I leave my employment? What am I going to do about health insurance? Do you have any scenarios that you can share with us about what that looked like for people you've worked with?
Yes, thank you so much, Ray, for speaking that and putting that perspective, because I do feel like a lot of people don't see it that way. But yes, I have worked with many people who were in that same position with that decision. And when I helped guide them to make that decision, I'll give you an example. One of my friends, will call her Jenny. Jenny has a very successful coaching practice where she does strengths-based coaching. So she helps you find, similar to you, Ray, what you are good at, what comes naturally to you, and to develop a business around that. And she's done very well with it. However, she has a university job where she teaches, and she's had that for 2 decades, over 2 years. And even though she's reduced her workload at the university only just enough to keep her health insurance benefits, she can make so much more money if she gives the $30, 30 hours minimum work that she's doing to keep her health benefits. If she puts that 30 hours and her full energy into her coaching practice, she can make so much more money. That's more than the cost of her health insurance premium. And that's the exact conversation that we had, Ray. The picture that you painted is, how much more is it costing me? And am I able to make that up with my work? Will one client make up, the cost of my health insurance for the year? Can I take on one more more project? Can I just increase my rates a little bit more just to account for this difference? And like you said, we're now entering a situation with uncapped potential. So do that math. Just look at that difference and see how can I make up for that difference so then I can exceed that difference.
Exactly. And it's that freedom to build the business model that you want and that you deserve, and that doesn't have a ceiling on it imposed by an employer. And that more than covers the cost of health insurance when you go it independently.
Yeah. And I will say that I've been talking to her for over a year now, kind of helping her work through this decision. And she did say that I wish I had just made this decision years earlier. And then if you think back, like how much money you could have made more if you didn't have an employer. If you're at that juncture right now, make the decision now. So you don't have to look back and say, oh my gosh, I wish I cut the employer cord earlier.
Yeah, exactly. Ah, amazing. This is exactly why I wanted you to be on the show. I knew this was going to be a power-packed episode, so full of information and really clarifying this crazy, murky, topsy-turvy world of health insurance. Thank you so much, Noor. Where can people check you out and learn more about how you help people figure out the right health insurance plans for them as freelancers?
Thank you, Ray. Thank you so much again for having me and allowing me to share my knowledge and information. You can find out more about me on my website. That's drnoorhealth.com. I'm sure Ray will link it down below in the show notes.
Absolutely.
And you can also find me on Instagram. I'm on stories all the time. You can watch my life in stories. I have a little 2-year-old. He's on my stories a lot too. I'm going on vacation soon. So anytime I'm traveling, I'm on my stories. So I hope to catch you on my social media. And I'm also active on LinkedIn. So if you want to connect professionally, let's do that. So I would say check out my website and connect with me on Instagram and LinkedIn.
Fantastic. And yes, we will put all of those links in the show notes so people can find you in all the right places. Thank you so much for being here, Noor. I really appreciate it.
Thank you, Ray. Thank you again.
Hey, Ray here again. Thanks for listening. If you liked this episode, please subscribe and rate us in your favorite podcasting platform. Want to be a guest on the show or know someone who has an amazing story of entrepreneurship? Apply on our website at chironconsulting.us/podcast.